Hey there, Wall Street winners. It is Sunday, March the 23rd in the evening, and we're just looking at the week ahead. If we take a look at the Bloomberg, we've got a lot of things leading in to Liberation Day, which is what President Donald Trump is calling April 2nd. So we're a week Wednesday away from a week Wednesday, we'll see Liberation Day, so April 2nd, following April Fool's Day. He's superstitious, apparently, so he doesn't want to do it on April 1st. And the stock market has clearly corrected over the last, call it month at this point, and is in a very volatile state due to the level of uncertainty out there. But we do expect on Liberation Day to hear more about the tariff plan and any retaliatory tariffs and hopefully more surgically applied tariffs as opposed to generally applied tariffs. It appears that the administration behind the scenes and behind the statements made, grandiose statements made by the president, um, to induce uh, maybe fear to a certain extent or just uncertainty and create an opportunity for him to negotiate a better deal or better deals in general. The administration appears to be working on the fine print and the specifics of these tariffs that have been discussed now for far too long, really, without any detail, but nevertheless have been a concern to the overall market. And that concern is driving commerce in general or business in general into a bit of a decline. And that decline is induced through consumer uncertainty, which we've seen out of the University of Michigan consumer sentiment reports. And we'll hear again from the University of Michigan this Friday on their consumer sentiment. So we'll have another read into what the American consumer is thinking and how that thinking is affecting spending and how that spending is potentially affecting the economy. So, as we head into the trading week of March 24th to the 28th. We've got a lot of things going on this week, although we're slowing down from an earnings season perspective. It is getting to the end of earnings season as we roll into yet another new earnings season. So, the end of this quarter's earnings. The narrative is still very negative, where even good earnings, as we saw last week with Micron, where they had good earnings, good revenue, and positive future forecasts was positive after the announcement in the aftermarket, but then shot negative to the tune of 5 and 7% the following day in the pre-market and into the market itself. We also heard from one of the US home builders, Lennar, last week, and they came out with okay earnings, but a conservative future forecast. And their stock declined on Friday due to that. We hear on Monday from KB Home, which reports more home related information, more home sales information from a home builder perspective. So we'll be keeping an eye out on that on Monday. Tuesday, we're going to hear from a company I don't follow, but it is an interesting company in that if if consumers in the US aren't going out to spend as much at restaurants, it typically means that they haven't stopped eating. It means they're eating more at home. So they're not ordering in as much, they're not going out as much. So if they're doing more cooking at home, assuming they're not just buying pre-bought meals, and they are cooking, which I think the majority of Americans are doing, then they're probably using spices. And McCormick is a spice maker and has typically had some pretty good earnings. And this could be one where when you see a downturn, so for example, in COVID, McCormick did very well because people were cooking at home. You couldn't go out to restaurants or you weren't going out to restaurants. And that spice company took off. So I think that could be another kind of replay of something that happened in COVID if we're seeing consumer spending in restaurants and external food sources on the decline, which we have been seeing based on the earnings coming in this quarter. Then we get in Wednesday to GameStop, Dollar Tree, Paycheck, Cintas, and Chewy. And out of all of those, I've never been a GameStop investor or fan. I don't think Dollar Tree is going to be doing very well based on imposed or the potential for imposed tariffs. We saw Walmart and other retailers, Costco, get hit on this. So if anything, I might be shorting Dollar Tree. I'm on the fence on Paychex. I'm not sure. It's not a company I've regularly invested in. Cintas is a uniform company that provides uniforms for small businesses, medium, large enterprise businesses. And I think we're going to see a bit of a downtick in Cintas. And then Chewy is the pet food company, and not just pet food. I think it's toys. It's a bunch of stuff. I'm not a Chewy customer. Don't know a ton about Chewy, but I've heard great things. Everyone who I talk to who uses Chewy loves Chewy, and I think Chewy is going to be a stock of the day there on Wednesday and could pop despite all this negativity out there, because everyone loves pets. And if the company supplying food to our pets is doing well, I know my dog Louie loves dog food and dog treats and things that Chewy would sell. I think Chewy could be an interesting pre-earnings purchase for a bit of a pop in earnings. I think it'll have a positive future forecast as well. If people aren't going out and spending their money on themselves, they do tend to overindulge on their pets if they have a pet. So I think that's an interesting one this week. Then we've got Lululemon coming out on Thursday, and there's a ton of people shorting this stock right now. So the shorts are betting against it. It's a super strong company. The clothing they make is, in my opinion, phenomenal. I'm a big lover of a number of the different products at Lulu for men and women, but I know I wear a bunch of the men's clothing and it is super comfortable. And I think they're due for a bit of a rebound here, but I'm skeptical around the tariffs. So I'm kind of on the fence with Lulu in this quarter. I think it's a good long-term buy, but I'm not sure it's going to have a huge pop this quarter. So still sitting on the fence there. And then we're going to hear about personal consumption expenditures or PCE data as well as pending home sales on Thursday. And then finally, Friday, as I mentioned earlier, we're going to close out the week with the University of Michigan consumer sentiment. And some of these earnings reports earlier in the week will probably be a good indication of what that consumer sentiment reading is going to be. So that's where we are going into the week. Still a good idea to be risk averse, try to maintain a good cash position so that when things do turn, and hopefully it turns after Liberation Day, when we get more information from President Trump and his administration on tariffs, and then the effects of those become digested. I think it's going to take a few weeks for that to happen, if not longer, depending on what's said and what's not said. But stay risk averse and be ready to get back in slowly, not all at once, but slowly as you feel things may be turning. And what's going to be a good indication of that is consumer confidence. So as you can see in the Bloomberg here at the top, futures are up, which is positive for right now, but it is Sunday evening, so we'll see if that holds into Monday morning. But it looks like we might start off the week with a little bit of a pop upwards, and we'll see what information, tweets, truths come out of the White House, if anything, that may derail that. Good luck in your trades this week, and if you're liking these videos, please hit the like and subscribe button.